So we absolutely have to go ahead and touch on Tesla stock as a lot of market participants are starting to panic after the recent selling pressure that we saw take place. However, I kind of want to let everyone know that the panic, we have to kind of save that for next week as we get a fundamental update on the underlying business for Tesla with the delivery numbers, and that's when we may have to start panicking. Now, right now, we're currently in a stage that I like to call the consolidation stage and phase, right? For example, we know that we saw this massive run up for Tesla after the post election results. However, we ended up seeing some selling pressure, a bit of a bounce, and then again, some selling pressure, kind of ending things off where we were last week. And so that's what you call consolidation. Now, I don't think it's time to ring the alarms for panic just yet, but next week we may end up seeing a moment where we may have to ring the bells, and I'll go ahead and touch on what price levels I think we want to go ahead and watch out for, as well as kind of what are some underlying things that we should kind of be a bit concerned of in regards to Tesla. Now, kind of skipping towards the fundamentals, one of the things I want to highlight is just what the analysts from the sell side have been kind of saying within the last 3 months. Right now, we see that there's 34 analysts who gave stock ratings for Tesla, and the consensus is hold. And so that means that right now there's a bit of skepticism in regards to Tesla, and we see that the 12-month forecast for the price target for Tesla is $294.30, which is a little over 35% from where we currently are. Now, again, we kind of have to understand that this average is a bit skewed from this low price target of $24.86. I think that's very unlikely. I believe that's Gordon Johnson from, I forgot what firm he or what research firm he's from, but we have to know that brings down the average. But nonetheless, we have this high, forecast of $515 by next year, and then the average is kind of slightly under 300. I think it'd be, a little higher up and kind of closer to maybe like 320. But again, it is going to get skewed from this one of the lowest price targets that we see on Wall Street. But that does show overall that even if we disregard this portion over here, there is some skepticism from the sell side analysts. And it makes sense because we're going to go ahead and delve into a little bit of the business model for Tesla and what we're seeing. But first, I want to just highlight this post from Troy Tesla. Actually, this post from Sawyer Merritt that he responded to, right? So if you don't know, Sawyer Merritt is someone who frequently makes commentary on Tesla. He's one of the best accounts to follow any news for Tesla. And he quoted something that Jay Leno said, who's a very big car enthusiast. And Jay Leno said, "Everyone who wanted an electric car bought one. That's why I think Elon Musk is so smart. Every liberal in California bought a Tesla, and while conservatives were like, that's a hip guy, well, now he switches to Trump, and you get all these conservatives buying electric." Now, that's kind of the gist of what Jay Leno said. However, I want us to understand that there's a difference between what is said on the media and what the actual data actually shows. And so we have Troy Tesla, who loves to go ahead and bring up forth the data from Tesla. He mentioned that while Jay Leno's claim that conservatives are buying lots of Teslas is kind of what was recently said, it doesn't match up with the sales data. He says this year Tesla's Model 3/Y sales are expected to drop by 13% in the United States and 9% in Europe. And frequently on this channel, I've highlighted how there's a big risk in Europe. Europeans are just not buying Teslas as they did in previous years, and that's a huge concern. Right now, he goes on to say that while sales have increased in China, there aren't enough to fully offset the decline. Tesla's still trying to avoid a drop in total car sales this year compared to last year, but they're struggling with demand problems in the US and Europe. And that's something that we have to be worried about, because when we take a look at the statement of operations, right? It's your financial one of the financial statements from Tesla's recent earnings. What I have here is total revenues, right? And again, this is represented in millions, but we'll just read it as what the number shows, 25,182 in revenues. Again, these figures are in millions, but just for the sake of saying the numbers in a much easier fashion, 25,182 for total revenues, while 20,016 come from automotive sales. You do the math, and that puts you slightly under 80%. It's like 79 point something. I did it earlier. And so that means that while, yes, many of the Uber Tesla bulls are pointing towards Optimus, they're pointing towards FSD, the reality is what we see from the tangible revenue, what we see on the, what we're seeing in bottom line, or, from the revenues for, top line from Tesla, is that cars make up a big portion of its business. And while, yes, we know that energy is growing, it's a huge segment that we want to continue monitoring. Service and other revenues, we really don't get to see what exactly that is itemized. But while those are other areas we want to look at, it's still 80% or slightly approximately 80% a car company. And that's a huge concern, right? Because when you have a company that primarily sells cars, but they're not delivering and selling cars like they used to, well, that's not good from a fundamental perspective. But we'll go ahead and continue because Troy Teslake also posted this saying that based on my analysis of DMV VIN data, Model S/X production this quarter is likely to be at its lowest point in the past 10 quarters. Annual production is expected to drop from 70,629 units in 2023 to 51,223 units in 2024, which is a decrease of 27.5%. Not looking good. Now, he goes on to say the cause of this lower demand isn't clear, but the decline in sales seems to spread evenly across all regions. Now, one of the things I kind of mentioned in regards to going back to what the other post was in Europe, I think Tesla, its lack of newer models isn't really capturing the demand for EVs in Europe, especially when you're getting all these other automakers just flooding with these new models. But again, that's just speculation, just kind of in regards to Europe. But overall, the clear picture is that delivery numbers aren't looking great, right? They're just simply not looking great. And that's something you want to be mindful of. Now, again, the huge, fundamental picture that we get in less than a week, it's actually 6 days away, is that we get full Q4 vehicle delivery data on January 2nd, around January 2nd, right? Now, analysts are currently saying that, there's likely to be a new quarterly record for vehicle deliveries, and that's good news. However, it remains to be seen whether it will be enough to propel the company to yearly delivery or yearly unit delivery growth. And so, kind of not looking good, especially when 80% of the business comes from cars. But, kind of just looking at things from a technical perspective, I do want to highlight that while Tesla stock is kind of selling off a bit, it's not just Tesla stock in silo. This is what we're seeing with the overall markets. For example, you take a look at the S&P 500. We had a red day. You take a look at XLK, which is a tech sector. Again, you see some red. You look at RSP, which is a great way of looking at market breadth. And we saw that market breadth was weak, right? This is the S&P 500 equally weighted. So all the constituents in the S&P 500 with an equal weighting, and it was pretty weak pretty much for the entirety of December, and it started picking up. We started seeing some strength, but then today we ended up seeing some red. And again, we take a look at the advanced decliners, we see that the New York Stock Exchange, NASDAQ, S&P 500, a large portion of companies are red. So it's not Tesla stock in silo. We're just seeing kind of momentum in the market not be strong, and that's not good, right? Because if you see, an individual company or even the S&P 500 pushing up, but then you see the S&P 500 equally weighted pushing down, that's not a good signal for the health of the stock market, right? And so something we want to pay attention to, just look, from a technical perspective with Tesla. But nonetheless, I want to talk about, just what we're looking at going into next week, right? Next week, delivery numbers, if delivery numbers come below expected projections, well, that could easily cause Tesla to break below this area of support that I have here labeled at around $414.93. And the reason why that would be an area to panic is because we know that there's little volume relative to price. Now, one of the things I often share is that when there's little volume relative to price, whether there's selling pressure or buying pressure, that's where you see the big moves. For example, as we're moving upwards, little volume relative to price, that's where you see the big moves going up. Again, you see that over here. Now, when you have the concentrated areas of volume relative to price, that's where you see consolidation, right? So those you'd map that as an area of support and resistance, kind of like what we see over here. And we kind of see a little bit more volume kind of pick up over here as we're in this consolidation phase. Now, again, if we fall below that area of $414 due to bad delivery numbers, well, that puts us at an area of little volume relative to price. And if more selling pressure takes place, we could quickly see a drop from, that area of $414 to this area of support here. And that's a little over 17%. And so that's a dramatic drop. And so, although I'm bullish on Tesla in the long term for my portfolio, I haven't been buying more shares of Tesla as I think that these are inflated numbers from a fundamental perspective. And I kind of want to just touch on something that someone commented. And by the way, I appreciate when you guys leave your comments. I think, hearing different perspectives are important. And I want to highlight this comment here from Ryan6391. And, I'm just sharing what he mentioned in my response to it. He mentioned that the release of V13, so he's talking about FSD, is being 5 times better. Isn't that fundamentals, right? He goes on to say they showed a video of a car driving for an hour in Manhattan during rush hour, driving flawless. Nothing to see here. The huge increase in computing going online in Texas for FSD and also bought in December isn't fundamental nor the ramping of the semi. So he's just kind of, saying, hey, look, Justin, all these improvements, is that not an increase in the fundamentals? He says he'll buy the dip. And again, you guys should always do whatever you see value in. I don't tell you guys what to do. This is just my perspective. But I ended up responding to, Ryan6391 saying that, while these developments are exciting, they represent like the potential for Tesla rather than the immediate realized revenue or earnings growth. And I say that fundamentals, when they relate to stock prices, about how these developments translate into tangible financial performances, right? I mentioned, when you look at revenues, profit margins, production scalability, and long-term competitive advantage, that's what you want to look at. And for example, while V3 and FSD show promise, they need to generate significant reoccurring subscription revenue, right? Or meaningful drive adoption before they impact the bottom line. Now, the reason I mention that is because, while yes, we are seeing marginal improvements in FSD, you know what we're also seeing? The take rate for FSD relatively low. I mean, Tesla even offers months of free subscriptions for FSD, and people take it, but they end up not actually subscribing to the service. And so it's kind of looking like FSD is a bit of a novelty, and maybe that will change when, they solve autonomous driving, but that's yet to happen. And I mentioned how, the computing expansion bot projects, they're R&D heavy, it's intensive for research and development, and they don't have clear timelines. They have unclear timelines. It's been almost a decade of Elon Musk talking about solving autonomy. Let's be honest, right? And so for that to contribute revenue or profit, that's something we have to look at. Now, the semi ramp up, while it's promising, is still in early stages of capital intensive stages, and with mass adoption and cost efficiency yet to be demonstrated. I'm not looking at that, right? I don't really count that to the fundamentals because it's not something tangible. If you want to look at something tangible, look at the previous earnings and look at where majority of Tesla's earnings come from, and it's the delivery of these vehicles. And when we see expectations of deliveries not looking strong, well, that's something that could be a bit concerning. And again, not dissing, Ryan here for his comment. This is just my opinion. I'm not saying I'm right and he's wrong. Again, you guys should only trade in whatever you see value in. And again, I kind of want to let everyone know that I am bullish on Tesla in the long term, but I don't see these as real dips, as I still believe that these are, kind of elevated price levels or extended from the fundamentals. These are at high multiples, and I would rather buy Tesla at a better discount, because here's the thing, right? A lot of people will say, well, the future or what you buy Tesla at doesn't matter because the future is going to have bots and it's going to have fully self-driving. But here's the concern, right? You can overpay for a stock now, even if you believe the future is going to have all these great developments. How is that? Well, one, the future isn't for certain, right? You don't know what's going to happen in the future. I mean, people have been saying FSD is going to be solved for like the last decade, and we're still here, right? Which is the future from the past, and it hasn't. So you don't know how long that could take. And yeah, even if the price goes up in the future, you're not really buying it at areas of huge discounts, right? If you really want to go ahead and invest in the long term for a company, you want to buy it when it's actually on sale. It's not different from anything else you buy. Just like when you do your holiday shopping, right? You want to go ahead and look for deals on Black Friday. And I know there's let's not go into the scam of Black Friday. I know some people will say, but they don't even lower the prices. This is just an analogy, okay? What I'm saying is that you want to look for deals before you actually deploy capital for anything that you buy, and it's the same for participating in the market, right? Because this dip may in reality not be a real dip, especially if we may fall down a quick 17% with this little volume relative to price and bad delivery numbers. But again, time will tell. I don't have a crystal ball, and we know that Tesla has had surprises in the past in regards to deliveries and its actual earnings. And so I could be wrong. Many analysts could be wrong, and we may actually see Tesla have a strong delivery number. In that case, that's very bullish. But for the time being, the outlook isn't looking good. Market breadth is pretty weak, and so we could potentially see a big drop in Tesla to this area where there's more volume relative to price and more consolidation as the next area of support. And me personally, even if Tesla does fall this area, I still may not buy more, as I'd like to buy Tesla a bit more of a discount. But that's just me personally. Again, you should only trade and invest in what you see value in. I try to preach that in all these videos. Don't copy me, right? I could be wrong. That's just kind of my belief. And again, what I'm doing is fit for me personally because, I don't like buying. Even if Tesla came down here, I actually have too much exposure to Tesla. I've been buying lots of Palantir, and even I had to slow down on Palantir just because I honestly believe now Palantir is. Oops, I clicked the wrong. Yeah, there we go. Wrong Palantir, right? We're going to type in PLTR. And I think Palantir is overextended. And so I don't even want to buy more Palantir at the moment. And I like Palantir, right? But again, those are just my views. You should never copy what I do. I could be completely wrong. Yeah, I've had a great track record, but just past performance is not indicative of future performance. And I could be completely wrong. And I want to kind of just put that out there, right? Again, just do whatever you see value in. But you guys let me know in the comment section down below. What are your thoughts for Tesla? Again, I like hearing your thoughts and your perspective because it helps me kind of balance what I believe as well, right? So I encourage you guys to leave that comment. And I'm not picking on Ryan 636 or 6391. I actually prefer you guys to leave some comments so I could kind of just pick what you guys think. But with that said, hopefully you guys found some value in today's video, and I'll see you guys on this next video right over here. Take care, guys.